This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, April 24th, 2024. That means it is DCA Wednesday, and of course, this will be the first DCA Wednesday of the new halving cycle of Bitcoin's fifth epoch, however you pronounce that. And of course, Bitcoin remains on sale, so we're going to stack cheaper than we could have just a couple of days ago. So that is always a nice bonus. It has certainly been a glorious day here on the Space Coast of Florida. Certainly a lot nicer than the 91 degrees it was just a couple of days ago. Today was a glorious 80 degrees. That works out to about 26 degrees Celsius. It had been getting really hot, and but 3 days ago it was 91 degrees, which is about 33 degrees Celsius. And then we had an overcast and breezy day, and it was just gorgeous. It was almost a Southern California day. For those of you listening in California, you know, like June gloom in San Diego, where it's cloudy, maybe 72 degrees and breezy, and there's just a little bit of moisture in the air. So it's cool enough that you could wear like a windbreaker if you wanted to, but nice enough that you could just wear shorts and a t-shirt as well, which is what I always wear, that in my Jerusalem cruisers. I guess that used to be a slang for sandals, but with all the conflict that's going on in the Middle East, that's probably not a funny thing to say anymore. But it is certainly a t-shirt, shorts, and flip-flop day today in Florida, and it's not even 78 degrees right now. It was about 80 for the high, and it's late enough in the afternoon now that it is just gorgeous out. In fact, I had to drag myself into the studio in lieu of sitting on the patio and watching the sun prepare to set, because it is just so nice. One of those kind of days. Well, one of the things that happens in Florida quite often is it's just so oppressively hot in the summer, you know, like 98 degrees and 100% humidity. And it doesn't really start to cool off until after the sun goes down. And then you get the nice cool-ish breeze coming off of the ocean, the nice sea breeze. And it starts to get really nice at like 10 o'clock or 11 o'clock or closer to midnight. And then by the time it's like 1 or 2 in the morning, it's just really, really nice. And if you're not careful, you find yourself watching the sunrise, because it just gets harder and harder to go inside as the night gets nicer and nicer. Now, of course, the very beginning of the peak of hurricane season in the end of August, beginning of September, there's like always a 2 or 3 week period where we don't even get any sea breeze whatsoever. And it's just hot and stifling 24 hours a day. So I'm not quite ready for it to be Florida summer yet. I've enjoyed this winter. We haven't had a whole lot in the way of cold days, just that spectacular, gorgeous weather that Florida is known for. Boy, I'm getting off on a big tangent. As I mentioned, there is a lot to go over today before we make our DCA Wednesday stack. But before we do any of that, let's take a real quick look at the vital statistics. At the time of this recording, we are sitting at a block height of 840,732 blocks since Bitcoin entered this halving epoch. And the US dollar value of Bitcoin, well, if you have been watching the price relentlessly, it's down several $1,000s today. Ringing in at $64,220 US, but that's actually almost exactly $4,000 per Bitcoin more than it was just last DCA Wednesday. So I remind you to zoom out. Along those lines, one filthy US dollar will purchase you 1,557 sats. So not quite as much as the 1,632 sats that a stinking fiat cuckbuck would have purchased you last Wednesday. Basically, anything below the previous all-time high is on sale in my book, because the way Bitcoin has worked out in the past, the last time was a little bit different. We did drop below the previous, but I'm getting a little bit ahead of myself. Traditionally, in the past, in Bitcoin's history, whenever we had a new halving cycle and Bitcoin eclipsed its previous all-time high, it never dipped back down below the previous all-time high. Of course, it did last year. You know, we had we had, or 2 years ago, I guess, in this cycle, it broke that rule with, we had, the Terra Luna and the Celsius debacle, and then Bitcoin held its own. It did pretty well. I mean, that really tanked the price of Bitcoin, especially since we had a bunch of runaway cascading liquidations, short liquidations, long liquidations. Then when the FTX implosion finally happened, that was the nail in the coffin that plunged Bitcoin into the teens, as low as 15,000, depending where you get your data. And prior to that happening, Bitcoin had never plunged below the previous all-time highs, so it should have held about $19,000 if that were the case. Tomato, 15,000 for a couple hours was pretty close to that. And they say history doesn't repeat, but it rhymes. But if that general sort of thing holds true, after we go on to set a new all-time high, and a lot of people argue whether we really set a new all-time high or not because they like to adjust things for inflation, and we definitely had an unusual set of circumstances with the ETFs getting approved and that FOMO, the corporate FOMO, the institutional FOMO, the big pump that we got from the ETFs that boosted us to a new all-time high. Whereas traditionally we wouldn't be talking about a new all-time high until maybe around November or December of this year. Usually I would have predicted that we wouldn't have eclipsed 69,000 until closer to Thanksgiving anyway. Nonetheless, in general, when Bitcoin does go on to retake the previous all-time high and go on and set a new all-time high, that's it for the previous all-time high. You expect to never dip down below that again. And even though we did in this last epoch, it was only for a matter of hours. It was almost a technicality. So with that in mind, anything below $69,000 is a price that after Bitcoin goes on its face melting bull run, you should never expect to see again. Will we retrace all the way to $60,000 during the next Bitcoin winter, the next bear market? Maybe. It's possible. Again, I don't have a crystal ball. But even if we do, the lowest point of the cycle is always relatively short-lived. For example, right now we're sitting at $64,200, and that is otherwise that's more than triple the cycle low of $15,500 or $16,000. So anybody that purchased at $15,000 or $16,000 is looking pretty darn good right now. So even if you buy right now and Bitcoin manages to somehow shoot up to 500,000 wherever it goes and then crash back down to $60,000 before the next halving, if it recovers into the $100,000 or $200,000 realm, 64,000 is still going to look pretty darn good. So as a general rule of thumb, I say that Bitcoin is definitely on sale. And, if you believe in hyper Bitcoinization, if you believe that even if Bitcoin just replaces gold and goes on to be at parity with gold as far as market capitalization goes, Bitcoin has more than 10x to go still. So I think anything less than $1 million is a freaking bargain. The only reason I really care about the price on a day-to-day basis is because that determines how many Satoshis I'm going to get for each US dollar that I convert into Bitcoin. Continuing on, our current block height puts us a mere 209,268 blocks away from the next halving. And that is currently forecast to be, are you ready to schedule your plans for your next Bitcoin party? Did you travel to a Bitcoin halving party for this halving? If you didn't, you know what you missed out on now. If this was your first halving, you got a taste of what was going on all around the world and in all kinds of different locations, from El Salvador to Warsaw to Berlin. There was a lot of really neat things going on. And so mark your calendars. The next halving is looking like it's going to happen on March 16th, 2028. As you know, the miner reward halving is cut in half every 210,000 blocks, and that just occurred at block 840,000. That works out to about every 4 years. It seems to be a little earlier each epoch because, a lot like Bitcoin price going up and to the right, Bitcoin's mining hash rate has continuously been going up and to the right. And even though Bitcoin has that genius difficulty adjustment to try and keep blocks coming in on a 10-minute average, it seems like most of the time when Bitcoin readjusts to bring that average in line with 10 minutes, additional better hash rate pours onto the network, and they have to just keep adjusting upward. And so they're always playing a little bit of a game of catch up as far as those block times are concerned. And so it'll be interesting to see 4 years from now whether we're looking at anywhere near March 16th, 2028 for that halving, or whether it's more like January or February of 2028, or even sooner. Who knows? And I guess it's kind of a useless thing to even talk about for the next couple years because this cycle is just getting started. Bitcoin's current US dollar value gives it a market capitalization of That'd be nice. 126 trillion, $1.26 trillion, still below silver's market cap of about $1.32 trillion. But we're up, 0.05 trillion from last DCA Wednesday. So for those of you looking at the price and going, oh, Bitcoin's crashing, Bitcoin's down, woe is me. Again, zoom out, because market cap is actually up from last week as well. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 28 ounces of gold to purchase just one Bitcoin. Of course, the price of gold is trending to zero in Bitcoin terms, although Bitcoin has trended down a little bit since its new all-time high, and the price of gold got a little bit of a bump. So, that's a volatile metric, just like everything to do with Bitcoin. But currently, for those of you who value wealth in gold, it will still cost you almost 2 pounds of gold to purchase just one Bitcoin, 28 full 1 ounce gold coins for just one Bitcoin. And if I remember, we'll talk a little bit more about gold and Shifty Pete here after we get through the statistics. But for those of you who value your wealth in pizzas, one Bitcoin will currently purchase you 3,591 large pepperoni pizzas from Papa John's. That is 221 more pizzas than one Bitcoin would have purchased you just last Wednesday. So again, I say, for those of you who think the price of Bitcoin is down today, well, zoom out, because in terms of US dollars, over the week we're up, and in terms of pizzas, over the week we're up. And that is one pizza a day, every day for almost 10 years. Again, as you know, it dawned on me a few months ago that while I was doing this pizza math, comparing how many pizzas you could purchase for just one Bitcoin, 9.8 years is more than 2 additional halvings from now, more than 2 new all-time highs if Bitcoin continues to repeat the 4-year halving cycle. And so, that number of pizzas would be in the the hundreds of thousands of pizzas by the time we get to that point. And at some point in time, you're going to be approaching more than a human lifespan worth of pizza for just one Bitcoin. And that is really cool, considering that Laszlo purchased two pepperoni pizzas for 10,000 Bitcoin all those years ago on the first Bitcoin Pizza Day. An event that is coming up soon. We're less than a month away from Bitcoin Pizza Day. If you're not familiar with Bitcoin Pizza Day, obviously you haven't been listening to this podcast, because we reference it almost every Wednesday. But Bitcoin Pizza Day is a celebration of Bitcoin's first real-world transaction, when a programmer from Florida named Laszlo purchased 2 large pizzas from Papa John's for 10,000 Bitcoin. And ever since then, on the anniversary of that day, that's been referred to as Bitcoin Pizza Day. And we celebrate in numerous ways. And we celebrate every DCA Wednesday. We memorialize that purchase every DCA Wednesday by keeping a Bitcoin to pizza tally, checking that Bitcoin pizza metric. And speaking of getting back on track, getting the metrics, Bitcoin's mempool is a lot more crowded than it was last DCA Wednesday. There's some news that I want to get to in the news section on that front, but checking Clark Moody's dashboard, I know it's a controversial metric, but Clark Moody's dashboard is showing that there are 71 blocks worth of transactions clearing in his mempool, up from 65 blocks last DCA Wednesday. So an extra 6 blocks worth of transactions pending. Of course, his mempool's limited in size, so it's excluding a lot of transactions. But, since we've been using that metric for the entirety of this podcast, I'm kind of sticking with it until maybe some of this shenanigans with inscriptions, ordinals, BRC20 tokens, etc. goes away, and we get back to normal where his mempool size is sufficient. But in the meantime, and we're gonna keep referring to his mempool statistics. Of course, you should be running your own node at home, and if you are, then it's up to you how large you want your mempool to be, whether you want it to be at the default size, or whether you want to make it bigger, or whether you want to engage in censoring some of those, filtering some of those S-coin transactions that are being etched onto the Bitcoin blockchain. And that's a subject for a different podcast, as far as ways to not prune. I keep wanting to say prune. Pruning is a different thing when it comes to running your node. But there are ways to filter out inscriptions and ordinals so you don't bloat your individual node. Back on track, though, if you have to make an on-chain transaction with as busy as the network is, Clark Moody's fee estimator is saying that it's going to cost you a fee of 295 sats per VByte to guarantee that's included in the next block, and that is up from 142 sats per VByte last DCA Wednesday, a significant increase, almost double, more than double actually. And if you have up to a day to wait, though, Clark Moody's fee estimator is estimating that a fee of only 16 sats per VByte will get the job done. And if you have up to a week to wait, he still says that a fee of 5 sats per VByte will eventually be mined, although I wouldn't hold your breath because we've seen some of the mempool bloat calm down, subside in the last couple days, but I haven't seen anything even close to a hint that we might get 5 sat per VByte transactions mined anytime soon. Mempool.space, as usual, is telling a slightly different story. Their high priority fee estimate recommendation, they're saying that for a fee of just 71 sats per VByte, you can guarantee that your on-chain transaction is mined in the next block or two. Obviously, that's less than a third. It's only a quarter of what the fee estimator on Clark Moody's dashboard is recommending. So keep that in mind if you do have to make an on-chain transaction, such as a consolidation transaction, which now is too late. I would personally hold off from any transactions that aren't urgent, that aren't completely necessary to do right now. But still, 71 sats per VByte, even at Bitcoin's current price, only work out to about $6.38. And while that's a lot more than what we've seen in the past, that's actually not that expensive when you're talking that you can move any amount of money anywhere in the world almost instantaneously. Nobody can stop you, and you can do it for just $6.38. Along those lines, if you have a medium, low, or no priority transaction, mempool.space is recommending a fee of $59, $49, or 8 sats per VByte. Again, I would maybe consider an 8 sat per VByte transaction if I were not in a hurry, if I knew I had time to wait, if the transaction didn't go through at all, for example, and it wouldn't break my heart. But that's a you do you thing. Hopefully you consolidated your small UTXOs a long time ago when prices were cheaper, and that if you need to pay someone with a Bitcoin, you can do so via the Lightning Network, where it's still basically free as long as you've got channels open and you had them open in advance. Otherwise, you're going to get hit with those on-chain fees for opening new channels. Again, I'm getting away from the topic here. Back to the statistics. That metric, has been my favorite for most of this podcast. Bitcoin's 24-hour average transaction rate, as one might guess, is just ripping. The current 24-hour average transaction rate is 7.12 transactions per second, as high as we've seen it at almost any time during the history of this podcast. I'm scrolling back through the notes, and many, many months ago, we saw 7.73 transactions per second and 7.06 transactions per second. But just at a glance, those are the only 2 weeks I can see where we were above 7 transactions per second. So things are really, really, really busy out there. And again, most of it has to do with that ordinals and inscriptions type hysteria that we'll get into in a little bit. Since the last DCA Wednesday podcast, Bitcoin's mining difficulty had a 2% upwards adjustment. As I mentioned, Bitcoin adjusts the difficulty that it takes for a miner to find the next block every 2016 blocks, which works out to about every 2 weeks, with the goal of keeping blocks coming in at an average of 10 minutes between blocks. If they're coming in faster, it gets more difficult to try and slow that down. If blocks are coming in slower than 10 minutes on average, you sometimes get a difficulty decrease. And that has happened from time to time, although it's certainly a lot more rare than difficulty increases. Currently, we're just 60 blocks in from that adjustment, so we have 1,956 blocks to go until the next difficulty adjustment, almost 2 weeks, 13 and a half days from now. That's looking like that's going to be on May 8th. And this is way too soon to tell because we've only had 60 blocks. And so think of the average as a lot like flipping a coin. If you flip a quarter and you're looking for heads or tails, if you flip that coin 60 times, you might get way more heads than you get tails. But if you flip that coin 2016 blocks, you should get about 1,008 heads and 1,008 tails. Currently, right now, we have way more heads than tails because blocks are just ripping. And as a result, depending where you get your data, we're looking at an increase in the difficulty adjustment of anywhere from just 0.5% to as much as almost 32%. And that is because blocks are currently averaging 7 minutes and 38 seconds. I wouldn't worry too much about that number because that 10-minute block time is an average. just while we were waiting for the halving to occur, people were lamenting that, hey, it could be that this halving might not occur for hours and hours because we get a couple blocks that take 2 hours to come in or something like that. Instead, we got a bunch of blocks that came in back to back. If you're watching any of the live streams, especially Bitcoin Magazine's live stream, they had each block that they were counting down. They had a little pre-canned spiel, a little video that they were going to play. And then they had a topic they were going to talk about in between each block. And they had to fast forward a couple times because blocks just kept sneaking up on them. And that's because, like I said, that's an average. Sometimes blocks come in at the same time, and sometimes they take over an hour between blocks. But right now, those first 60 blocks have come in at an average of 7 minutes and 38 seconds. If that were to hold, we would have a gigantic difficulty increase, but I would wager that it's going to be closer to 1 or 2% by the time we have 2 weeks worth of data to get a good, reliable average. Before we go any further, I want to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 allows you to help support your favorite podcast through the value for value model, where you can either stream sats on a per minute basis or boost the pod, which is basically a shout out as a lightning transaction. So you tip your favorite podcast, but you send a message that we read out on the following episode. We do not have any boosts to read this week, but thank you to those of you who have been supporting the podcast. And even if you don't have the Satoshis to spare to support the podcast, we still appreciate your listening because, having listeners is the most important portion. It's the most important metric, whether you can afford to help support the podcast or not. Just listening helps support the podcast by boosting us in the ratings, by helping feed that algorithm monster. There's additional things you can do like rate or review the podcast, make sure you have automatic downloads, etc. that will help feed that algorithm monster. But in general, the biggest reason it's important for you to be listening to this podcast is because I get the statistics and I don't know who you are necessarily, but I can see where you're listening from. And that's really cool because every week I sit here in the studio, I'm looking at 2 monitors and a microphone, and I've got some studio lights going because sometimes we do a video version of this podcast. So it's a full video studio. This is an audio only podcast today, as most of them have been. But having those statistics and having those of you who've reached out to me in the past helps me visualize who you are. And it's very rewarding to be able to put faces with those numbers because, I'm not just doing this because I like the way I sound when I have a pair of headphones on and listen to myself talk. I do this because, like a lot of you, I like to talk about Bitcoin, and I don't have a lot of IRL friends to talk about Bitcoin with. I've got a lot of family members who are absolutely sick of hearing me talk about Bitcoin. So knowing that there's, people scattered all over the world who not only enjoy talking about Bitcoin, enjoy listening to me talk about Bitcoin, that's really flattering. It means the world to me. So thank you to all of you listening, regardless of where you are. In Bitcoin, there's been a lot of talk recently about ossifying the code, about making it harder and harder to change Bitcoin Core because of some of the things we've seen, like with those orders and inscriptions, unintended consequences that have come along as a result of not necessarily knowing what you're getting into when they're making changes. Similarly, our geographic distribution of listeners has seemed to ossify a little bit. I don't remember I think the last time we had any significant change, it wasn't even a significant change. The last time we had any kind of change in our listenership statistics was February 28th. And that was a small change where Luxembourg scooted ahead of Canada in the rankings by just 1%. But since that time, we've had zero change. Our top 10 countries as follows are still number 1 is the United States. So thank you to my fellow Americans listening from right here in the good old US of A. Number 2 remains Argentina. So muchos gracias, amigos, in Argentina. Hola. Number 3 remains Germany. So guten Abend, because it is definitely evening here in the United States. And definitely evening in Germany or Nacht in Germany. Danke für alles, mein Freund in Deutschland. Number 4 remains Luxembourg. Again, guten Abend or guten Nacht or Morgen to those of you who speak Luxembourgish. Dankeschön. Number 5 remains Canada, which I jokingly refer to as the Great White North or America's Attic. And it looks like the weather's gotten just absolutely gorgeous up there. I do listen to a couple of different Canadian Bitcoin podcasts, and they were talking about most recently playing golf outside and the weather just being gorgeous. So that's nice. So the weather is absolutely gorgeous up there. We're rapidly approaching the time of year when the weather is going to be way nicer up here than it is way nicer up there than it is down here, where it's just gorgeous outside and it's too hot to be outside in Florida. Number 6 remains Spain. So hola, muchas gracias, amigos. Number 7 remains Colombia. Again, hola, muchas gracias, amigos in Colombia. Number 8 remains Sweden. So hey, to those of you in Sweden. Number 9 remains the United Kingdom. So hello to my friends across the pond in the United Kingdom. Number 10 remains Venezuela. Again, hola, muchas gracias, amigos in Venezuela. So that is the top 10. We have listeners all over the world, but we start breaking down into 1% of our listenership or less, and it just runs all over the gambit. So we just list the top 10 on the podcast every week, and I know it must be getting a little boring because it hasn't changed. So if you're in a country like Mexico, which is lurking down there at number 11 and just a few fractions of a percentage below Venezuela, if you want to see things change, maybe you can get a friend to listen to the podcast and help boost your country up in the rankings so we can feature your country and make things just a little bit different. Maybe break up some of that ossification as far as our geographic distribution of listeners. I am having a hard time talking today, and I have not been drinking, plebs, because I kind of gave up alcohol in 2020 for the most part during the lockdown. And then when I decided that and it wasn't like I had a problem when I wanted to stop drinking. And then every time I wanted to drink, I would look at a really nice bottle of alcohol and I'd say, holy canola, that's 100,000 sats. I'm not going to spend 100,000 sats on something that's going to give me a headache. So I just kind of stayed away from it. I've had a couple drinks here and there when friends are in town. And I was going to have a glass of wine last night on the patio because the weather was so gorgeous. But I digress. I haven't been drinking. I'm just having a hard time talking right now because it is just nuts. I mean, I live on a barrier island here on the Space Coast of Florida, off the east coast of Florida, 16 miles from the mainland, but not 16 miles out to sea. There's another big island between us and the mainland on this barrier island, but it's party town city right now. It's not quite as busy as when we had spring break in full swing, but there's still a lot of people over here causing problems, and it's been nonstop sirens up and down Highway A1A all day. And so I don't know if you can hear them. When I was doing the warm up for the show, I recorded a little bit of a snippet, and I just sat there and let the mic record silence for about 30 seconds while a siren went by and played it back, and I couldn't hear it at all. So hopefully that's the case, but it is distracting. Not just because I'm a perfectionist, but because, sirens are attention getting. They're that way for a reason. They're designed to make you pay attention. So when I'm sitting here trying to keep organized in my head what I want to talk about, and police sirens or fire truck sirens blare, it's a little distracting. And I'm blaming that for why I am having a harder time than usual spitting words out today. On to the news. Of course, the news that everybody seems to always want to talk about is the US dollar price. And the price of Bitcoin is down for the day, down almost 4%. It got as low as around $63,000 a little while before I started recording this podcast. But again, if you remember, Bitcoin normally wouldn't be anywhere near all-time high territory this early in the halving epoch. And if you just zoom out a bit, Bitcoin is obviously up quite a bit from, it's up from last week, and it's up significantly from when we recovered from the crab market or the bear market when Bitcoin was down in the teens or even the 20s not too terribly long ago. And again, it's up from the 61,500 that we purchased at just last Wednesday. So speaking of the news cycle, we're only a handful of days since the halving, but the usual suspects have already rolled out their price predictions. And I don't mean to call Econometrics a usual suspect, but Econometrics is one of the accounts I follow on Twitter at Econometrics. And they don't have a specific price prediction per se, but they have updated their Bitcoin growth trajectory chart for the cycle. You've probably heard me talk about their chart on numerous occasions, and they have one thing I love about Econometrics chart is it's not a prediction, it's just data. It's not a forecast, it's past, it's historic data. They show Bitcoin's growth trajectory of the previous halvings, and it gives a range and it gives a mean, an average between what is 3 sets of data now. And then they show where Bitcoin's price is currently, in the time period and the range established by the previous halvings. And it's too soon to have any kind of meaningful, we're at the beginning of the halving. The chart spans a 4-year time period. So we're days into the halving. So basically there's no data at all in this chart other than we're at the gates and we're off. But if you look at the data, the previous halvings define a range. And if Bitcoin finds itself somewhere in that range, if it doesn't go way above it or way below it, the upper limit of that range is a US dollar price of 4,500,000. And the lower bound, even if Bitcoin only performs as well as it has in the worst performance cycle, in the worst performance that it's had in any of the previous cycles, the lower bound is 140,000. So there you have it. Again, Econometrics doesn't have a crystal ball, and this isn't a forecast of what will happen. It's just showing what Bitcoin has done in the past and what it might look like if Bitcoin performs similarly to how it has in the past, or even, an average right up the middle of between the previous cycle ranges. So, of course, the last cycle defined an entirely new range because it started out right up the middle for the first maybe year after the halving, but then it dropped significantly below the mean, the range of the previous halvings, and it followed it really well once it kind of established itself. When the mean was going up, it was going up, and the mean was going down, it was going down for the most part, but it did so almost as far away from the average, almost as far away from the bottom of the range as we are from the average of the range right now. So it's possible something like that will happen, but you never know. And again, this isn't a prediction. This is just a reference to show where we are compared to what Bitcoin has done historically. Of course, who can forget Plan B? Plan B, the author of the stock to flow model, he took a lot of heat for a stock to flow model because people took it to heart and they were trading based on it, and it didn't necessarily pan out. And he's not, I guess the tweet that I'm highlighting now, it's actually a reply to a tweet where he mentioned that stock to flow was kind of irrelevant now, and that basically put together a formula that came out to his price forecast for end of year 2025 of a price of $544,000. And he did so not using the stock to flow model. He also has a stock to flow chart out there as well. If you scroll through his feed, he's at 100 trillion USD on Twitter, Plan B, that is. So he says, I forget, he's replying to somebody. He says, yep. And he gives some numbers, says 544,000-ish, and by end of year 2025. So remember, a lot of people deservedly gave Plan B grief over that stock to flow chart, the stock to flow predictions. But to be fair, his original stock to flow chart predicted a cycle high of around $55,000, and obviously we attained that. It was his updated stock to flow cross asset chart, his stock to flow 2 or whatever he was calling it, 2X chart, that failed spectacularly. That was predicting a high of over $150,000 a year. So, in addition to the fact that his original stock to flow chart actually would have been correct, there are many of us, including famously Dr. Jeff Ross, who have pointed out that the last cycle was really odd. We had a couple of big black swans. We had the China miner ban, of course, the halving kicked off right as we were going into a global economic shutdown. We had the lockdowns, etc. So the argument is that without those black swans, without, for example, people thinking they bought billions of dollars of the Bitcoin through FTX that FTX didn't actually purchase, so the purchases actually weren't moving the Bitcoin price in the real world, that if it wouldn't have been for those things, that we would have had an all-time high, significantly higher than the $69,000 that we saw. So it's possible that this was a black swan event, that his stock to flow chart, his stock to flow cross asset model might have been correct. But that's neither here nor there. And I want to remind you that I've said this a million times. I'll say it again. Nobody has a crystal ball, and the price of Bitcoin is what the price is, and the price was what the price was. And there's nothing that any chart or any formula or any voodoo can do to change that. But it's food for thought. Willie Woo has some input on the whole stock to flow concept, tweeting earlier today. Now that the monetary inflation rate of Bitcoin has dropped below gold, it will be interesting to see if its market cap will exceed gold according to the stock to flow thesis. In my view, Bitcoin will lag its stock to flow valuation by 5 to 10 years. The world simply doesn't move quickly. Custody infrastructure, regulations, trading instruments, asset manager acceptance, all takes time. So not much of a prediction, I guess, from Willie Woo, other than that maybe Bitcoin will one day eclipse gold's market cap, and I don't think a lot of people are calling for it to do that this cycle. That would be, more than 10x from where we are now. And Bitcoin is certainly 10x before during its cycles. But I think most people that I know that are going out on a limb and making price predictions are talking more like, $250 to $500,000 Bitcoin, not $500 to $600 or $700,000 Bitcoin. What Willy Woo is referring to here is that with the halving, Bitcoin's inflation rate, there will only ever be 21 million Bitcoin. So in theory, you could say there's 21 million Bitcoin. They just haven't been all doled out yet. So the rate at which they're being doled out was giving Bitcoin a monetary inflation of a rate of about 1.8%, which was similar to what the Fed targets for the U.S. economy, similar to gold. And with that being cut in half, it's more like 0.85% monetary inflation rate, which makes it significantly less than gold, which is, got about a 2% annual inflation rate, about 2%. Enough gold is found every year to increase the total supply of gold above ground by about 2%. And now Bitcoin has an inflation rate significantly below gold, and in fact, the lowest of any monetary asset in history. So that's interesting food for thought. Of course, that is definitely the basis behind the whole stock to flow theory or supply and demand theories in general, right? The majority of new Bitcoin for sale on the market, or the majority of Bitcoin for sale on the market, is new Bitcoin mined by miners that they have to sell to pay for their expenses. And prior to the halving, that was 900 new Bitcoin a day were being mined. And after the halving now, there's only 450 million new Bitcoin mined each day. And at the current US dollar price, that's less than $30 million a day where the Bitcoin mined. And that's if the miners sell everything they mine. As you know, they sell some of it, but they keep some of it in their treasury as well. They've been building up these Bitcoin war chests. But in theory, if they were to sell every single new Bitcoin mined today, there would be less than $30 million of the Bitcoin going onto the market available for purchase any given day. And I don't have the statistics for today, but yesterday the Bitcoin ETF soaked up a total of $31.6 million. So essentially, just the ETFs purchased more Bitcoin yesterday than is being mined each and every day. And that isn't a record day for those ETFs either. And that takes into account the Bitcoin that was flowing out of the Grayscale Bitcoin Trust. There was enough inflow amongst the other Bitcoin ETFs that it had a total net inflow of 31.6 million. And when you run out of Bitcoin, but you have buyers, obviously that means the price is going to go up. Of course, the halving coincided with the launch of more ordinal style shenanigans, with the so-called runes going live at block 840,000. And without dedicating too much more time to that, this caused a massive spike in mining fees, a lot of congestion, and a lot of mining fees. At the worst I saw, mempool.space was saying that an on-chain transaction was going to require a fee of 1,515 sats per VByte, more than 134 US dollars to be mined. And the very next block that came in had a fee range of 1,535 sats per BByte, all the way up to 5,862 sats per BByte. People were paying more than a full Bitcoin to have a Bitcoin transaction mined. I think we saw a 34 Bitcoin miner reward in one of the blocks, and that was just nuts. Obviously, that's calmed down quite a bit. But in the meantime, the miners absolutely raked it in for a day or two. For example, at the time of the halving, a home miner with an old Antminer S9 was looking at their daily reward being cut in half. Well, any miner with any type of hash power was going to have their reward cut in half. But if you were a home miner and you had an Antminer S9, prior to the halving, you were making about 2,100 sats a day per miner. And that was going to be reduced to about 1,050 sats per day. Instead, you would have seen your reward shoot up to 3,747 sats for the first day after the halving per miner. And that did taper off fairly quickly. And today the miner rewards are basically back to where they should be. But that was just nuts. And that was because of the race to mint those runes. I heard there's been a lot of argument about spam on the Bitcoin blockchain. And I've heard people refer to the runes as spam. And I've heard other people say it's a valid transaction. There's no such thing as spam. If it's a valid transaction, it's a valid transaction. And all valid transactions should be treated equally. But I heard someone counter that by saying, a DDoS is a valid transaction too. But a DDoS is just millions and millions and millions of valid transactions that are designed to crash the network. And And I think that was a pretty good way of explaining it. That pretty much sums up the ERC20, the BRC20, the ordinals, the stamps, and the rune shenanigans. Of course, depending where you were celebrating, the halving occurred either on 420, Elon Musk's favorite holiday, or 419. It was just after 420 UTC time, but early in the evening for most of the United States. It was about 8 p.m. here in Florida on 419. So if you were in Europe and you were up celebrating the middle of the night, you got your 420 halving. If you were in the United States, the halving happened on 419. But no need to fear in traditional American flair. It was pointed out that, well, I'm not going to read this test of censor, but basically it's F420, 419, Bitcoin halving is way more epic. And they went on to point out the shot heard around the world is a phrase that refers to the opening shot of the battles of Lexington and Concord on April 19th, 1775, which sparked the American Revolutionary War and led to the creation of the United States. So, hey, Bitcoin is revolutionary technology. I'm sorry you didn't get your 420 halving, but you got your 419 halving, and that has a nicer revolutionary flair to it, at least if you're a freedom lover, and at least if you're in the United States. So, kind of off topic. Not really. A little bit of fun. Okay, some breaking news before we get into making our DCA Wednesday stack. This happened just a couple hours ago, but multiple sources are saying that the U.S. government has arrested the founders of Samurai Wallet and has seized their website and is seeking to seize or shut down the Samurai apps in the Google Play and Apple Store. Got numerous headlines here. Axios is reporting Samurai Wallet founders arrested as part of federal crackdown on crypto mixing. Same with Decrypt. Feds arrest founders of Bitcoin mixer Samurai Wallet. The Block says co-founders of Samurai Wallet arrested and charged with money laundering. And CoinDesk, I usually stay away from CoinDesk because their relationship to, Galaxy Digital and Barry Siebert and all that scammery and the ongoing shenanigans with the Grayscale Bitcoin Trust. But they've got one of the most solid articles on this. Their headline, Samurai Wallet founders arrested and charged with money laundering. The article states, federal prosecutors charged Samurai Wallet founders Keon Rodriguez and William Lonergan Hill with conspiracy to commit money laundering on Wednesday as the U.S. government continues its approach to prosecuting crypto mixing tools that may be used by illicit actors and foreign governments to hide fund transfers. According to a press release issued Wednesday, the pair developed, marketed, and operated the mixer, which, quote, facilitated more than 100 million in money laundering transactions from illegal dark web markets. Samurai overall facilitated around 2 billion in, quote, unlawful transactions between 2015 and the present, the release alleged. So this is nothing new. It's not the first anyway. We've seen the government go after mixing services in the past. For example, the article ends up by saying Wednesday's arrests come as the DOJ prepares for its upcoming trial against Roman Storm, the developer and co-founder of crypto mixing service Tornado Cash. That case is being pursued by the DOJ's Southern District of New York Division. Sound familiar? Recently, the DOJ's Washington, D.C. unit successfully won a conviction against Roman Sterlingov, the operator of crypto mixer Bitcoin Fog, on money laundering charges. So now they're going after their third big case against mixing services. So I'm not going to issue advice on whether you should use a mixing service to obscure the history of your Bitcoin, but up until this point, that has not been illegal. I don't think the DOJ is alleging that it is illegal. I think all of these cases, one was saying that, North Korea used one of the services. In this case, they're specifically saying they helped people launder $2 billion worth of unlawful transactions. So that's why they're saying this is illegal. But the big takeaway here is that we're most certainly in the they fight you phase. And remember, this highlights the importance of decentralization. The government cannot shut down Bitcoin. They can't directly attack Bitcoin, but they can go after centralized services. What Bitfog, what Samurai, etc., all have in common is they had developers, companies, people to go after, people to arrest. In the same way that all these stable coins and most altcoins have. Even this number 2, quote unquote, crypto coin Ethereum has the Ethereum Foundation, and they've got developers who wield control over the protocol, or stakers now who wield control directly over the protocol. And those are points of failure. Those are attack surfaces. And fortunately, that's one of the brilliant things about Bitcoin is it's decentralized. So, they can't just arrest the developer of Bitcoin and order the Bitcoin node to be seized and shut down. Because if they could, I'm sure they probably would. Anyway, before we move on to that DCA Wednesday stack, I covered this a little bit in the last DCA Wednesday. I gave you my predictions for what was going to happen after the halving. Basically, number one was TikTok next block. Things are going to continue to function exactly as before, except for that the monetary inflation rate has dropped. The amount of Bitcoin awarded to miners is now cut in half. I did mention that in the past, the price has temporarily gone down after the halving, and that may or may not come true this time as well. I mentioned that we'd probably hear the miner death spiral FUD, although we really haven't this time, probably because miners are raking it in right now with the higher fees because of the shenanigans that's going on, the Bitcoin blockchain spam. I mentioned that the 4-year halving cycle will not die, at least not this cycle. That previously the argument was that when the miner reward went from 50 to 25, that was a big deal. But then when it went from 25 to 12.5, that wasn't as impactful. So the mining's impact, the cycle, the 4-year cycle of related to the mining reward halving would start to fizzle and die. And of course that was wrong. It didn't happen. And then they said, well, it's going to get cut. The reward's going to get from 12.5 to 6.25. And that's clearly nowhere as impactful. So we're going to have the end of the halving cycle. And of course that was wrong. And now we've got the next halving and the reward is cut to 3.125. So there are those who are saying that this is the end of the cycle, that's insignificant compared to what it had previously been. So, we don't have as much of an influence on supply and demand. And I want to point out that when the first halving occurred and the reward was reduced from 50 to 25 Bitcoin, yes, that was more Bitcoin. 25 Bitcoin is more than 3 Bitcoin. But the economic impact was that $325 worth of Bitcoin was taken off the market every block. The second halving, when the reward is reduced from 25 to 12.5, of course, that was only 12.5 Bitcoin coming off the market, but the economic impact was $8,134 worth of Bitcoin was no longer going to be available come the next block. Then the third halving, when Bitcoin went from 12 to 6.25, obviously less than 6 Bitcoin coming off the market, they said wasn't going to be enough to make an impact, but that 6 Bitcoin had an economic impact because of the increased price in Bitcoin of 60,837 Bitcoin. Now, this halving with 3 Bitcoin basically coming off the market, the economic impact per block is $187,500, more than 3 times the economic impact of the previous halving. So that is why I say that the miner reward halving, the miner reward being reduced in half, is going to continue to have a huge impact on supply and demand, because it doesn't take a rocket scientist to figure out that taking $187,000 worth of Bitcoin off the market is a lot more significant than taking just $60,000 worth of Bitcoin off the market. Of course, only time will tell if I'm right, but I think I have a pretty solid chance of being correct on that, because I'm not a rocket scientist, but even I can see that with increased demand for Bitcoin, even without the ETFs soaking up the entire miner rewards with the Bitcoin, just with more awareness, even if the demand for Bitcoin became the same, if there's $187,500 less Bitcoin for sale every 10 minutes, the less supply and the same demand equals increased price. As it turns out, we've got less supply and more demand, which is why I think this halving is going to be particularly face melting. Anyway, rinse and repeat. Those were my forecasts, and I stand by them. But again, only time will tell. All right. Finally, to the meat and potatoes of why we're here today. As you know, today is DCA Wednesday. If you're just following us and you've never heard the term DCA before, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 144th stack. We started stacking on Wednesdays, and that was our regular interval, all the way back on July 28th, 2021. So far, we've stacked 143 times, and we chose for our equal portion, by the way, was $20 US. I chose $20 because I wanted to show 2 things. I wanted to show, even if you're not Michael Saylor, even if you're not a hot shot, even if you're very, very poor, even if you come from a country where $20 is a big deal and it's all you can scrape together, that you can still build a stack of Satoshis that will be appreciable in size, and that will position you for when the hyper Bitcoinization comes to have a stack of Satoshis that will be more than the average person out there will be able to have one day if Bitcoin is divided equally amongst the entire population of the world. And I think we've proved that. So far, we've converted $2,860 worth of US fiat into Satoshis at just $20 at $20 a week. That has garnered us a stack of 9,214,384 sats. And by spreading those purchases out, we bought the lows and we bought the highs. We bought everywhere in between, but our average purchase price has been $30,940.58. And of course, that's been going up recently because as we buy Bitcoin at significantly more than $30,000, each additional stack is going to increase that. But either way, $30,940 is significantly cheaper than the current US dollar value of Bitcoin. And to grow the stack today, as usual, I'm going to use the Cash App. Cash App is not a sponsor of this show. I like Cash App because I think it's one of the easiest ways to stack Bitcoin. And if you're only going to stack small amounts of Bitcoin, the fact they charge a slightly higher fee, I think, is more than made up for by the fact they will let you transfer your Bitcoin to cold storage without a miner fee. So, for example, if I were to purchase with Coinbase, they would charge me a couple of dollar mining fee to move to my hardware wallet. So the 45-cent fee I'm going to pay to Cash App, we'd have to stack 10 times before that would equal the $5 mining fee that Coinbase would charge me. And I don't even know what that mining fee would be right now because that's about what it was last time I looked. But of course, fees are through the roof right now. If you're in Europe, and I just read that Strike is now available there, and I like using Strike too. I use Strike usually if I'm going to purchase something for Bitcoin and I don't want to spend any of my own Bitcoin. For example, when I purchase coffee from El Salvador, I have US dollars on my Strike app, but I can say, well, pay this Lightning invoice and then they'll receive sats. And so I'm able to pay in Bitcoin without causing a tax consequence, without triggering a capital gains reporting event. So that's kind of cool. And if you're in Europe, apparently Strike is available in Europe now as well. Again, Strike is also not a sponsor of the show, but I do have a referral code in the show notes for Strike as well. So if it's something that you're considering using, consider scrolling through the notes to where you see the referral codes for Strike and Cash App. And I have one for Fold there as well. And if you use any of those referral notes, you'll get something for free just for using that code instead of just signing up. And of course, you'll help support the podcast as well because the podcast will get something in return as well. I digress. I've got Cash App open. I already have $20 on Cash App. So it's just a matter of tapping Bitcoin, tapping buy, entering $20, pardon me, tapping confirm, and boom, just like that, we purchased another 30,521 sats. And we did so at a price of just $64,055. A lot. That's almost $3,000 more expensive than last DCA Wednesday, although it that might seem like a good deal if you were looking at the price just last week, which is why I say zoom out. And the neat thing about doing this DCA Wednesday podcast is it forces you to zoom out. It forces me to zoom out because, I look at my charts and they're weekly charts. So it takes away some of that instability, some of that volatility. Today's purchase will bring our stack up to a total of 9,244,905 sats. And it did raise our average cost basis just a tiny bit. I guess, no, it didn't. It raised it a lot. Last week, we purchased a couple $1,000s cheaper, and it only bumped our average cost basis up by $12. But this purchase is raising our average cost basis by $211.71 sats. So our average purchase price now is $31,159.29. Still really, really good considering that, Bitcoin's ringing in at $64,000, better than $64,000. So less than half of what the current price of Bitcoin is. And even if we don't stack a single Satoshi ever again, when Bitcoin eventually goes to $100,000, that stack of 9,200,000 sats will be worth $9,244.90, which is not too shabby for just $2,880 accrued at $20 a week. If Bitcoin goes on to hit 1 million, that stack will be worth $92,449.05. A heck of a return for just $2,880. $880. All right, before I go, I want to reach out to you and ask you to help support the podcast. And you can do so really easily, regardless of where you're listening. If you could rate or review this podcast, if you're listening on Apple Podcast, if you make sure you have automatic downloads enabled, that'll ensure you don't miss a podcast. And again, it helps feed that algorithm monster. If you're not already following the podcast on Twitter, please follow us. We are at BTC Bulletin Pod, BTC like Bitcoin Bulletin Pod on Twitter. And of course, the more subscribers we have, the more people will see our tweets and the more likely you are to help orange pill somebody. Of course, there are various ways you can help support the podcast financially if you feel so inclined to do so. You can support us directly through our Spotify link. Of course, if you're listening on Fountain, you can help support the podcast via Podcasting 2.0 by either streaming us sats or by sending us a boost. If you do send us a boost, we read those on the upcoming episodes, so the next episode. And also, you can support us and get paid to support us by using any of those referral links that I have in the show notes. Currently, I believe if you click on the Cash App referral link, you'll get $5 for free for signing up, and the podcast will get $5 as well. Same thing with Strike. We'll each get $5. So you'll get paid to help support the podcast by using either of those referral codes. And I also have a couple other referral codes in there, including like for the Fold card. And I think currently you'll get 20,000 sats free for signing up, and the show will get 10,000. So that's really cool as well. Most importantly, though, I like to hear from you. So don't feel obligated to send a boost. You can DM me on Twitter. Just reach out and say hi. Again, that's at BTC Bulletin Pod on Twitter. Or if you don't use Twitter or X or whatever people are calling it nowadays, you can send me a good old-fashioned email. My email address is bitcoinbulletin@protonmail.com. Either way, though, don't forget to join us this Wednesday and every Wednesday where we continue to grow that stack together on our DCA Wednesday episodes, at least as long as there's people willing to sell us Satoshis for filthy US dollars. But until that time, keep on stacking those sats, you sexy sat stackers.